Hello and welcome to today's quick, punchy and spot-on video, which is called What's Winning in the Current Environment. And we will dive into the calls that have been made for clients and how they had turned out in light of recent macroeconomic events, pressure on power, corresponding, of course, US dollar and yields moves. I have been clear that the first market defended as a policy step is the treasury market. And here you can see those consequences shown in the US dollar move lower. It's against multiple currencies, of course, quite broad-based, because you can see that yields have trouble rising and the direction for them to be declining, with the short end of the curve still leading to the downside, is still there, firmly in place, and it has consequences. And those consequences were very nicely seen yesterday in the move of interest rate sensitive sectors. Russell 2000, you have checked how home builders have done, how real estate has done, and of course, trading signals had been benefiting right of the start of the week from my call to see prices heading higher. Gold, silver, miners, copper, on fire, all of them on fire in a very beautiful way. And here we go next with the bit contrasting call for oil to not really move in tandem with other real assets, but to keep very subdued, no matter what I think is the long-term case for an equilibrium price if I consider larger supply-demand aspects. We are far from that, but this is not yet the time to be betting on oil to be rising. When it comes to S&P 500, such is the market breadth perspective and the percentages of stocks trading above various periods of their moving averages. Of course, the picture is not looking bad from this perspective. However, what are the flies in the ointment? Tech, it's a bit standing apart. What about semiconductors? What about Nvidia? What about those wild gyrations in Tesla if I switch over to discretionaries? This picture, this sectoral overview, is masking imbalances, vulnerability, when it comes to the S&P 500 advance. And for now, S&P 500 is having trouble overcoming Monday's bump highs. It's there, kept there, and you can check where Nasdaq is at the very same time. Nowhere near to be found. And Russell 2000, does it have the power to keep underpinning through rotations that had saved the S&P 500 and are as well showing up in this interest rate sensitive index? You can check how well financials have been doing. You can check regional banks. You can check biotech and other sectors that have been and are benefiting from the prospects of lower yields. Remember what Powell had been saying yesterday. Does it ring a bell if you remember what Whaler had been talking about on Friday? Yes, there is a certain case to be made and markets are front running, and you can see it nowhere better than in gold, oil, copper, and as well yields and US dollar that just cannot catch Second breath. Visual page will help you decide what's right for you based on what and how you trade. Make sure to combine the daily analytics with intraday channels for maximum punch and one-on-one support.